Welcome to the Riskwiser Zone, the podcast where we dive into the latest news and trends in the world of finance and risk management. I'm your host, Louis, and I'm excited to share today's story with you. We're starting off with a fascinating piece that highlights the vulnerabilities in Australia's banking system. According to a recent investigation, some Australian banks are allowing customers to open accounts online without providing any photo identification. Yes, you heard that right. No ID required. This has raised concerns among experts about the ease with which identity fraud can occur, particularly in light of recent data breaches involving major Australian companies. The story centers around a woman who had two bank accounts opened in her name using only her Medicare number. The bank in question, UBank, allowed the accounts to be set up without requiring any physical ID or biometric checks. While the bank has since changed its policies and no longer accepts Medicare cards as sole identification, the incident raises questions about the effectiveness of current identity verification processes. Experts are warning that this lack of robust verification can make it easy for scammers to open fake accounts, which can then be used to launder money or carry out other illicit activities. In fact, the major banks in Australia have reported closing thousands of accounts linked to fraud or scams in the past year alone. Now, it's worth noting that some banks are taking steps to improve their security measures, such as introducing biometric checks like facial recognition. However, others are still relying on outdated methods that can be easily exploited by scammers. As we delve deeper into this story, we'll explore the implications for consumers and the financial sector as a whole. We'll also examine the potential risks and consequences of weak identity verification processes and what can be done to mitigate them. That's all for now. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. I'm your host, Louis, and we're glad you're joining us again for another exciting segment. As we dive into the world of finance and markets, we'll be discussing two intriguing stories that caught our attention. First off, let's talk about the recent developments in the Indian equity market. The Nifty 50 index has been making waves, climbing over 4% during the week ended May 16, 2025. This bullish momentum can be attributed to several factors, including the announcement of a ceasefire between India and Pakistan, which eased geopolitical tensions and boosted investor sentiment. Additionally, favorable updates on US-China trade negotiations have contributed to the positive outlook. Now, our experts are weighing in on what this means for traders and investors. Harshub Mahesh Shah of Wealthview Analytics believes that key dates and levels will play a crucial role in guiding market decisions. He's identified May 19 as a potential turning point for price action and trend validation. We'll be keeping a close eye on these developments to see how they unfold. In other news, the Securities and Exchange Board of India has been working to simplify the process of investing in the Indian markets. This is a welcome move, as it aims to increase transparency and accessibility for investors. However, it's essential to remember that investing always carries some level of risk, and it's crucial to do your research and stay informed. Moving on to another story, we have an update on the corporate bond market. The SEBI has introduced new regulations aimed at enhancing disclosure requirements for corporates issuing bonds. This move is expected to increase transparency and protect investor interests. While some may view these regulations as an added burden, they ultimately contribute to a more robust and stable financial system. As we navigate these complex markets, it's essential to stay vigilant and adapt to changing circumstances. Remember, at the Riskwiser Zone, we're committed to providing you with unbiased and informative content to help you make informed decisions. So, what can you expect in the coming weeks? Will the bullish momentum continue, or will we see a correction? Our team will be keeping a close eye on market developments and will bring you expert analysis and insights to help you stay ahead of the curve. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic discussion so far, covering various aspects of risk management and investment strategies. As we wrap up today's episode, let's take a look at some of the latest developments in the financial world. We have several IPOs lined up for next week, including Belrise Industries and Barana Weaves, which are set to rev up the primary market. Belrise Industries has fixed its price band at Rs 85.90 per share, while Barana Weaves is priced between Rs 205 and Rs 216 per share. These IPOs will provide investors with new opportunities to diversify their portfolios and potentially reap benefits from the growing auto component and textile industries. In other news, the market has been witnessing a surge in activity, with several companies gearing up for public offerings. Unified Data Tech Solutions and DAR Credit and Capital are also set to launch their IPOs next week, targeting to raise funds for various purposes, such as debt repayment, working capital, and general corporate expenses. It's essential for investors to exercise caution and conduct thorough research before investing in these IPOs. As always, we recommend that you assess your risk tolerance, financial goals, and investment horizon before making any decisions. On the market front, we've seen some significant movements in recent times. The Indian stock market has been volatile, with various factors influencing investor sentiment. It's crucial to stay informed and adapt to changing market conditions to minimize potential risks and maximize returns. As we conclude today's episode, we want to remind our listeners that investing in the stock market involves risks, and it's essential to be aware of these risks before making any investment decisions. We encourage you to consult with financial experts, conduct your own research, and diversify your portfolio to minimize potential losses. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.